Imagine this. It's Monday morning in Sydney. Your alarm goes off at 6:30 a.m. You drag yourself out of bed. Fight through traffic, work 8 hours. Come home exhausted. And at the end of the month, your bank account doesn't look much different. Now imagine another person. Same city. Same age. Same salary. But while they're sleeping, their money is still working. Not because they're lucky, not because they're rich, but because they understand one financial rule that most Australians ignore. And here's the scary part. Every year you delay learning that rule, you may be delaying your financial goals too. So if you've ever said, "I'll start investing next year," or "I don't have enough money to invest," stay with me. Because by the end of this video, you'll understand why waiting could be your biggest financial mistake, and how ordinary Australians begin investing without needing to be financial experts. The lie almost everyone believes when we're young. We're taught one simple formula. Study hard, get a good job, work hard, save money, and everything will be fine. But nobody explains one important problem. Saving money and building wealth are not exactly the same thing. Think about it. Imagine someone who saves money for years but never invests. Over time, the cost of everyday life changes. Groceries, rent, electricity, transport. If prices rise faster than your savings grow, your money may buy less in the future. That's why many people don't rely only on saving. They also invest with a long-term plan. Not because investing is magic, but because they want their money to have the opportunity to grow over time. Meet Jake. Storytelling. Let's meet Jake. Jake is 27. He lives in Melbourne. Every Friday. His salary arrives. After paying rent, bills, food, and entertainment, he usually has a little money left. For years. Jake kept saying, "I'll invest when I earn more." 1 year became 2, 2 became 5. Nothing changed. Then one evening, he asked himself one question. What if I don't need more money to start? What if I simply need a better plan? That single question changed everything. Instead of trying to become rich overnight, Jake decided to learn. He started reading. He understood the basics. He looked at diversified investment options. And most importantly, he stopped waiting for the perfect time. But here's where Jake almost made a mistake that could have cost him thousands of dollars. A mistake that thousands of beginner investors still make every single year. Before you invest your first dollar, you need to understand that mistake. I'll show you exactly what it is, and how beginners in Australia can build an investing plan step by step. Jake was finally ready. He had opened his investment account. He had saved his first few $100s. Everything looked perfect. Then he opened YouTube. One video said, "Buy AI stocks before it's too late." Another claimed, "This stock could double your money." Then someone else said, "The market is about to crash. Sell everything." Within 30 minutes, Jake was more confused than when he started. And that's exactly what happens to thousands of beginners every single day. Too much information, too many opinions, and nobody tells you what actually matters. Stop looking for the perfect investment. Here's the truth most finance influencers won't tell you. There's no perfect investment. No stock that always goes up. No ETF with guaranteed returns. No secret strategy that makes everyone rich. The people who usually build wealth aren't the ones chasing the next big thing. They're the ones who follow a simple plan, month after month, year after year. Because investing isn't about being right every day. It's about making good decisions consistently. The beginner's trap. Most beginners ask, "Which stock should I buy?" That's the wrong question. The better question is, what kind of investor do I want to become? Do you want to spend every day watching stock prices? Or do you want a long-term approach where you invest regularly and let time do most of the work? Many beginners in Australia choose diversified investments, such as broad market ETFs, because they provide exposure to many companies instead of relying on just one. That doesn't eliminate risk, but it spreads it. And for many people, that's a more comfortable place to begin. Why time matters more than timing. Imagine planting two trees. One is planted today. The other is planted 5 years later. Both receive the same sunlight, the same water. The same care, but one has a 5-year head start. Investing works in a similar way. Starting earlier gives your investments more time to grow. Although growth is never guaranteed, that's why many experienced investors focus on time in the market rather than trying to predict the perfect day to invest. Jake's first investment. Jake stopped searching for shortcuts. He accepted that he wouldn't become rich in a month. Instead, he created a simple plan. He invested an amount he could comfortably afford. He kept learning. He ignored most of the online noise. And rather than checking his portfolio every hour, he focused on building the habit. That one decision completely changed his mindset. He stopped asking, "How much did I make today?" and started asking, "Am I still following my plan?" Successful investing often starts with that shift in thinking. But Jake was about to face his biggest test, a market downturn. His investments fell. Fear took over, and in that moment, he had to decide whether to panic. Or think like a long-term investor. I'll show you what happened next, the 5 biggest mistakes beginners make, and the habits that can help you stay on track for the long run. 3 months after Jake started investing, something happened that almost every new investor experiences. The market fell. One morning. Jake opened his investment app. And almost every investment was down. His portfolio was showing red. He refreshed the screen again. Still red. His first thought was, maybe I made a mistake. Then his phone started buzzing. Friends were saying, the market is crashing. News headlines were filled with fear. Social media was flooded with people saying, sell before it's too late. Jake had 2 choices. He could panic. Or he could remember why he started investing in the first place. The lesson most people learn too late. Jake closed the app. Instead of reacting emotionally, he went back to his plan. He reminded himself, I didn't start investing for next week. I started investing for the next 20 years. That single decision changed everything, because successful investors don't try to control the market. They control their decisions. Markets rise, markets fall. That's normal. What matters is whether your investment strategy still matches your long-term goals. 5 rules that can change your financial future before you invest another dollar. Remember these 5 simple rules. Rule number 1. Never invest money you'll need for rent, bills, or emergencies. Build an emergency fund first. Rule number 2. Don't invest in something just because it's trending online. Understand what you're buying. Rule number 3. Think long-term, short-term. Market movements are normal. Rule number 4. Keep learning. The more you understand investing, the more confident your decisions are likely to become. Rule number 5. Stay consistent. Building wealth is usually a marathon, not a sprint. Let's go back to the beginning of this video. 2 people. Same country, same salary. Same opportunities. Years later, their financial lives looked completely different. Not because one was lucky, not because one was born rich, but because one decided to stop waiting. And start learning. The truth is, you don't have to know everything today. You don't have to invest thousands of dollars. You don't have to be a financial expert. You just need a plan. Patience. And the discipline to keep going. Your future isn't decided by one perfect investment. It's shaped by the small financial decisions you make consistently over time. If this video helped you understand the basics of investing in Australia, make sure to like this video, subscribe for more practical finance content, and let me know in the comments. If you were starting today, what would be your biggest question about investing? Thanks for watching, and I'll see you in the next video.